This is where everything is going to come together. We're going to review everything that we covered this week. Get a notepad and keep track of how many questions that you get right. And at the end, we're going to have the answer key and, a way for you to grade your performance. All right, so let's go ahead and let's get into it. What are the 4 key data points that every candlestick represents? Every candlestick gives you the opening, the high, the low, and the closing price for a specific time frame. It's basically a snapshot of the buying and selling battle during that period. If a candlestick is green, what does that tell you about the price movement during that time frame? A green candlestick is like a thumbs up for positive price movement. So it basically shows that the closing price is higher than the opening price, meaning that buyers were in control during that time frame. What is the significance of the time frame when you're analyzing candlesticks? The time frame that you pick decides how much price action each candlestick is going to cover. A 1-hour time frame represents 1 hour of price data, and a daily shows a full day's worth. Look at this candlestick that has a long upper wick. Based on the information that we covered, what does this upper wick suggest about the markets? Do you expect that the stock is going to start trending upward or move lower? Okay, so A is correct because when you see those long upper wicks, that means that buyers were pushing the price up, but sellers took control and knocked it back down. So that creates bearish pressure and hints towards a possible reversal. On this chart, you see a hammer pattern. What does this indicate about the potential direction of the stock price? A hammer candle shows that sellers pushed the price down, but they couldn't hold control, and buyers fought back and finished strong in that time frame. At the bottom of a downtrend, it's a solid bullish reversal signal. After seeing that, you may see a turning point. Is this pattern typically found at the bottom of a downtrend or at the top of an uptrend? This pattern is a bullish engulfing pattern, and they're strongest at the bottom of a downtrend. So it's going to start off with a small bearish candle, and then you're going to see a large bullish one that completely engulfs the first candle. So sellers are losing steam and buyers are stepping up. After you see this, you could see a bullish reversal. This candlestick looks like a Gravestone Dogee. Based on its structure, what type of price movement may come next? Would you expect bullish momentum to weaken or bearish momentum to strengthen? When you see a Gravestone Dogee after a strong price move upwards, then that could signal a potential bearish reversal. Why? Because it shows that buyers lost their control, sellers took over, and the price got pushed lower. On this chart, you see a Dragonfly Dogee candle. Based on the long lower wick, what could this tell you about a potential price reversal? If you see a Dragonfly Dogee candle after a downtrend, then it could signal a power shift. Sellers push prices down, but buyers take control, and it starts to move prices back up by the close. So that's a clear signal of potential bullish momentum. What's the primary difference between a hammer and a hanging man candle? Hammer is bullish, and you're going to see it at the bottom of a downtrend, and the hanging man is bearish, and you'll see it at the top of an uptrend. Which one of these patterns would signal a bullish reversal if you saw it at the bottom of a downtrend? A bullish engulfing pattern signals a bullish reversal after you see it at the bottom of a downtrend. So you're going to see a large bullish candle that completely engulfs the previous small bearish candle. So that shows that buying momentum is starting to take over the selling pressure. How does a hammer candlestick signal a potential reversal? A hammer candlestick at the end of a downtrend signals buyers are rejecting lower prices. So that's going to pave the way for a potential bullish reversal. Buyers are starting to step in here and take control. So what is the power of the 3 green soldiers and the 3 red crows pattern? With the 3 green soldiers, you're going to see 3 tall green candles, and each of them is going to close higher. So that shows strong buying momentum or a bullish reversal. Now, the 3 red crows, you're going to see 3 steady red candles dipping lower, showing strong selling pressure and a bearish reversal. Both of these patterns are important because they clearly point to potential trend shifts after consolidation. Why is it so important to wait for confirmation before you take action on a reversal candlestick pattern? When you wait for confirmation, it reduces risk. So for example, after you see a hammer candlestick, wait for a bullish close above that resistance, and that's going to confirm that the reversal is legit. How can using volume help build your confidence when you're trading candlestick patterns? So seeing high volume gives candlestick patterns extra credibility. So for example, if you see a bullish engulfing pattern with strong volume, then that signals proof of that buying pressure and the reliability of a reversal. Why is context like support and resistance levels and zones so important when you're looking at candlestick patterns? Candlestick patterns carry more weight at these key levels. So if you see a hammer candle near a support level, then that's a strong signal for a rebound. So based on this pattern, what is the price more likely to do next? Is it going to reverse downward or continue moving upwards? This is a double top pattern, and double tops basically say game over for that uptrend. So when the price shows that it's not able to break above that second peak, then selling pressure starts to kick in. You'll potentially see downward movement after that. This is an ascending triangle chart. So what does this pattern suggest about momentum, and where would you expect for that breakout to happen? All right, so this is an ascending triangle and it signals bullish momentum. So you have higher lows pressing against that resistance until you see that upward breakout. You see the symmetrical triangle forming. What's your next move? Do you wait for the breakout or do you act now, and why? All right, so a symmetrical triangle is basically neutral where prices build energy, but you need that confirmation for directions. You want to wait for the breakout. It could go up or it could go down depending on the trend. So this sharp price movement followed by consolidation looks like what type of continuation pattern? Also, what's more likely to happen next? So this is a bull flag and it's a continuation pattern. So you see that strong move upwards, that's the flagpole, and then you see that consolidation zone, that's the flag. So the next move is most likely going to be a breakout upwards. So I'm going to keep this bull flag and then have the pennant. How does the pennant pattern differ from a flag, and what's the breakout more likely to confirm? So a pennant is different from a flag in its shape. Okay, it's usually going to be smaller and it forms a triangle, kind of like consolidation after that flagpole. And then the breakout after a pennant usually confirms the continuation in the direction of that previous trend. You see a reversal candlestick pattern, but you notice that there's weak volume during its formation. So what does this tell you about the reliability of that signal? Seeing weak volume during a reversal means that that signal doesn't have a lot of strength. But if you see high volume, then that shows a lot of trader confidence and a higher chance that that reversal is going to stick. Okay, so that's it for the quiz. If you enjoyed this quiz, and I mean, come on, who doesn't like to flex what they've learned? Make sure you hit that thumbs up button. Now it's time to see how you did. We're going to have the answer key at the end of the video. So make sure to grab your scores and let's break it down from there.